If you are watching this video, then you probably like me. When I started trading, I watched countless videos on YouTube on how to start and what is the best strategy to trade, or even trying to find those heaven-sent indicators that can predict the future. To my surprise, I did not find anything that worked for me in the long term, meaning I was losing money. And what did I do? I started watching even more videos and consuming more content about trading until I became a profitable trader. I switched my trading strategy multiple times until I found what worked for me. And if you are still trying to find a good strategy to trade, then this video might be a solution you're looking for. First of all, you might know that there are several trading styles such as scalping, day trading, and swing trading. Scalping is a style where you enter and exit positions in a very short period of time. Day trading is usually when you keep your trades open for several hours and close them the same day. And swing trading is when you keep your positions open for days or even weeks before you close them. The strategy I'm gonna share with you is more for scalp trading, meaning you will enter and exit positions within a short period of time. I found scalp trading more effective because I can sit down at my laptop, look at the charts, determine the potential trades that I want to take, and execute them in a short period of time, take my profits, and be done for the day. By the way, if you're wondering what exchanges I use for trading, it's Bybit and BingX. And if you are from UK or United States, then I would recommend using Desk. All of those exchanges provide a great sign-up bonuses, and for your convenience, I will leave the links down below in the description. And now let me show how this strategy works. For that, we'll head to TradingView and check some charts. So now we are on the TradingView, and the very first indicator that we will be using is super simple to understand, and it's called moving average. And to open the indicator, we just click on indicators and type SMA, and we see moving average simple. We open that, and now we'll need to edit some settings on this indicator. In this instance, we will be using moving average 200, and to make it easier to understand, you will go to settings and change from 9 to 200. And another thing that we'll do is set the smoothing to 100 and click OK. And now two lines like this gonna show up on your chart. This indicator will tell us if we are in a downtrend or an uptrend of the market, meaning are the prices moving up or they moving down, and that will help us to determine when you need to open long position and when you want to open a short position. But the question is, how do you know if we are in an uptrend or downtrend? So one easy way to do that is the orange line is a smoothing moving average and the blue line is a moving average. So when you have the smoothing, the orange line surpass the moving average, the blue line, we are in a downtrend. And when you have the blue line surpass the orange line, then it means we are in an uptrend. So when the blue line is above the orange line, we want to open a long positions and look for a long. And when the orange line is above the blue line, we want to open a short positions and good short opportunity. And the good thing about the strategy is that we will be using only two indicators, and the last indicator that we will use for this trade is Fibonacci retracement levels. The full explanation of what is Fibonacci and how it is calculated might be too complicated to understand if you are new to trading, so I will tell you all you need to know so you could apply it in your trading. First of all, you can find the Fibonacci right here on the left sidebar where it says Fib retracement. So you click on that, and that's how Fibonacci retracement levels looks like. So these levels that you see are helping you to determine what could be potential support and resistance zones, meaning where price change might stop and start to reverse in the trend's favor. And as you can see, there are many lines. However, you don't need to worry, because for this strategy we will be using only one line, which is this blue line 0.786 zone, and that is the only line that will tell us when to open the trade. And the next thing is how to draw the Fibonacci on the actual chart, and I'm gonna show you that right now. But one more thing, before, since we're doing scalp trading, we will be using 5-minute charts. So you just go here and select 5-minute chart, and now you're ready and set to go to look for a trade. I will start by showing you how to take short position. So to take a short position, we need to be in a downtrend, and the downtrend again is when the orange line is above the blue line. So right here we have a downtrend. So we zoom in, and right here we can see when the orange line crossed the blue line, and it marks officially we are in a downtrend. So from here on we can look for a trade. And the very first thing when we want to do the Fibonacci retracement lines, we want to have a lower high and the lower low. And as an example here, you can see the price was dropping. It bounced 1 time, 2 times, 3 times, and right here we had a significant bounce, retrace. So once you see it retrace like this, let's say we are right here, right? We don't know what's gonna happen later, but right here the price are falling, and then it fell down and quickly recovered. So what would you do? You take the Fibonacci retracement tool, you mark the point where the price started dropping, and then draw it down to the lowest point, like this. And as I said before, the blue line gonna be our position open price. And since we are in a downtrend, we want to open a short position. So we set a limit order at that price. Right here you can see the price, 61,510. We always move our stop loss just next to the gray line above the purple line, above 0.886 zone, and we move our take profits at the 0. So always like this. And as you can see, our risk to reward ratio on this strategy is very nice, because in this case you're risking $1 to make $4.4. So if you enter with bigger position, then you're risking $100 to profit $440. And let's say that's how we set up our trade, and let's run it out and see if it's gonna play out. And as you can see, our order is triggered and the price keeps going down as predicted, and we have a successful trade. But if you're still having a trouble to understand how to place the Fibonacci, let me show you another example. So right here you can see the price keeps going down. We took one trade right here, took the profits, we are winning, right? The price keeps coming down, it reaches the new lower low. So that would be, if we place the Fibonacci, that would be our 0 point, and the highest point would be right here. So we would start from here at the lowest point again would be 0, and as you can see, it goes perfectly to our limit order, basically where you open the position, 0.786 zone. If we would have placed a trade here, we would put limit order here, our take profits at 0, and our stop loss just below the 1 zone and above the purple line. So in this case, again, we would have another successful trade, and our risk to reward ratio would be similar to the one before, which is very good. So that's how you would take short using this strategy. Now let me show you an example. How would you take a long position? So to take the long position, we want to be in an uptrend, blue line above the orange line. So right here you can see the blue line is above the orange line, and here we would want to take the position. Right here we have the moving average confirming us we are in an uptrend. So we can see the price going up and then having a small consolidation in the range, and then going up even more and slowly coming down. And let's say we don't see here what's happening. So what we would do, how we would draw the Fibonacci, when you take the long position, you have to draw the Fibonacci from the latest consolidation zone, basically where the previous move to the upside started. So that would be your starting point, and then you draw the 0 line at the highest point, like this. Let's say we are right here, we don't know if the price is gonna come down, but just in case, we're gonna set our limit order for a long position because we are in an uptrend. We set at this price, $58,279. We move our stop loss just below the purple line next to the gray line, and our take profits would be at the previous higher highs. So that's how we would set up our trade. Now let's run and see if that would work. The price coming down. Okay, as you can see, it triggered our trade. It went deeper but it didn't trigger our stop loss. And the price coming down, and we have another successful trade having risk to reward ratio at 4, which is very nice. Basically, you're risking $100 to make $400. As you can see, the price keeps going up, so you don't make any trade when the price goes up and it ranges at the previous highest high. You wait when the price goes down and makes the new low on the new range, and then it shoots up right here. And then what would you do? You would draw from the lowest point to the highest point, and as you can see, we would have another trade where it triggers at 0.786 zone, and we would have another successful trade. So that's how we use this strategy to open long and short positions. You always have to go in confluence with the moving average. So if you're in an uptrend, you're looking to open a long positions. If you're in downtrend, you're looking to open a short positions. Never bet against the trend. And in conclusion, if you want this strategy to work, make sure you follow risk to reward ratio I showed you. No strategy in this world have 100% win ratio, so keep that in mind. And the biggest upside of this strategy is that on almost every trade you have 1 to 4 risk to reward ratio, and depending on your size, you might risk $100 to profit $400, or you might risk $1,000 to profit $4,000. Even having a 40% success rate, which is very low, you will be profitable with this strategy and make money. And to improve your success rate, try to find more confluences to your charts. It might not be easy if you are a complete beginner to trading, but if you have some experience, then it shouldn't be an issue. If you have any questions, feel free to ask them in the comments. I'll be happy to answer.